Imagine this. The world's financial markets are shifting right under our noses. Some investors are making massive gains, while others are watching their wealth evaporate like water in the sun. But here's the catch. Most people don't even realize what's happening. Right now, there's a quiet but massive battle happening between silver, the tangible, physical metal that's been a store of wealth for thousands of years, and paper markets, those digital promises, stocks, ETFs, and leveraged instruments that dominate Wall Street. And in 2026, the choices you make could define your financial future. Welcome to Wealth Wave, where we break down complex markets in ways that actually make sense. Stick around, because by the end of this video, you'll have a clear roadmap for where smart investors are heading this year. And before we dive deeper, make sure to hit that like button and subscribe if you haven't already. Your support helps us keep bringing the insights you won't hear anywhere else. Let's start with a question. Have you ever wondered why silver has been quietly outperforming expectations, even while stocks and bonds seem stuck on a roller coaster of uncertainty? It's not luck, and it's not hype. Silver is unique. Unlike paper money or stock promises, silver is physical, it has intrinsic value, people have trusted it for centuries, and right now that trust is coming back in a big way. But here's the twist. While silver is tangible, the paper markets, think ETFs, futures, and derivatives, have been growing in size and complexity for decades. They offer leverage, accessibility, and liquidity that physical metals can't match. At first glance, paper markets seem convenient, almost irresistible. But convenience has a hidden cost. It's what most casual investors fail to understand. So why are some investors pivoting towards silver in 2026? It comes down to three big trends. First, inflation anxiety. Central banks around the world have been pumping trillions into the economy, and despite what mainstream headlines say, the erosion of purchasing power is real. Silver, like gold, acts as a hedge. Its value doesn't rely on someone's promise to pay. You hold it, and it holds its worth. Second, supply constraints. Mining silver isn't like printing money. It takes time, energy, and resources. Demand for industrial uses, electronics, solar panels, medical equipment, is soaring. That means the supply can't expand fast enough to meet growing demand, naturally pushing prices higher. Third, market psychology. When paper markets falter, people look for something real, something they can hold in their hands. That's where silver shines. Literally. But don't get me wrong, paper markets aren't going anywhere. In fact, they're more seductive than ever. With apps making trading as easy as scrolling through social media, millions of investors are pouring money into ETFs, stock options, and leveraged futures. These instruments promise massive gains, but with massive risk. And here's the danger. When volatility spikes, paper markets can swing violently. One wrong move and a portfolio can crumble overnight. Contrast that with silver. While it moves slower and more predictably, it carries a stability that paper simply can't match. It's the difference between riding a high-speed roller coaster and cruising in a solid armored car through a storm. Now, here's where it gets interesting. Smart investors aren't choosing one over the other. They're strategically positioning in both, understanding the strengths and weaknesses of each. Some are stacking physical silver as a long-term hedge while using paper markets for tactical plays. This hybrid approach allows them to capture upside opportunities without exposing themselves to total collapse if markets swing wildly. It's a balancing act, and it's what separates casual traders from true wealth builders. At this point, you might be wondering, how do I even start if I want to hedge with silver? First, consider what portion of your portfolio you want in physical assets versus paper instruments. Physical silver can be in coins, bars, or allocated accounts, giving you a tangible store of value. Paper silver, like ETFs or silver futures, allows for flexibility and leverage but comes with counterparty risk. And here's a key insight. In times of crisis, physical silver often outperforms paper. Why? Because people want something real, something they can rely on when digital promises fail. It's a lesson we've seen repeatedly over the last century. Now let's talk numbers, but in a way that actually makes sense. Over the last 5 years, silver has seen periods where it surged 30, 40, even 50% in a matter of months, often triggered by inflation fears or market instability. Compare that with paper markets, where leverage can amplify gains but also losses, sometimes wiping out months or years of growth in a single downturn. This is why timing and strategy matter, and this is where Wealth Wave really comes in, because we focus on helping you understand these shifts. So you're not just reacting, you're anticipating. But strategy isn't only about risk management, it's also about opportunity. In 2026, several catalysts are converging. Silver production remains tight. Industrial demand continues to rise. Central banks are signaling potential interest rate changes that could pressure paper markets. And geopolitical uncertainty? That's the wild card that can send investors running toward tangible assets in droves. By understanding these forces, you can make decisions that aren't just reactive, they're proactive. Let me give you a story. A friend of mine, let's call him Mark, decided to split his portfolio evenly between silver and paper instruments last year. When stock volatility hit in the middle of the year, he watched his paper holdings fluctuate wildly, but his silver stash held firm, even appreciating slightly. By the time the markets calmed, his overall portfolio was healthier than most of his peers. That's the power of balance, and why more investors are waking up to the fact that silver is more than a relic. It's a modern financial tool. Now, I don't want you to think this is just theory. There are real-world signals everywhere. Mining output reports, ETF flows, central bank balance sheets, they all tell a story of increasing interest in tangible assets. And at the same time, the complexity of paper markets continues to rise. We live in a world where algorithms and high-frequency trading dominate, and human intuition often gets left behind. Silver offers a hedge against that complexity, a safety net you can actually touch. By now, you might be asking, so where should I focus my attention? The truth is, it depends on your goals, your risk tolerance, and your time frame. If you're looking for stability and a hedge against global uncertainty, silver is a compelling choice. If you want high-growth opportunities, can tolerate swings, paper markets provide tools, but you need discipline, timing, and awareness. The most successful investors of 2026 aren't choosing one blindly. They're learning how to integrate both intelligently. And here's a tip that few talk about. Always consider liquidity. Physical silver is great, but selling it quickly can be a challenge in certain markets. Paper silver is instantly tradable, but it can collapse in value faster than you expect. Understanding these dynamics is what separates casual investors from those who truly thrive in uncertain markets. At WealthWave, we emphasize this balance because wealth is built not just on gains, but on the avoidance of catastrophic losses. Before we wrap up, let's circle back to the big picture. 2026 is shaping up to be a pivotal year for both silver and paper markets. Economic pressures, industrial demand, and investor psychology are converging in ways that could create unprecedented opportunities, but only for those who are prepared. The message is clear: don't ignore silver just because paper markets dominate headlines. Don't dive blindly into paper markets without understanding risk. The future favors those who balance, strategize, and stay informed. If you found this video insightful, make sure to hit like, subscribe, and ring that notification bell if you haven't yet. And I want to hear from you. What's your take on the silver versus paper debate in 2026? Are you leaning toward tangible assets, or are you all in on digital paper markets? Comment below and share this video with anyone you know who needs a financial wake-up call. Your engagement helps us bring more deep dive analysis straight to you, and trust me, the conversation is only getting started. Remember, building wealth isn't about chasing every trend. It's about understanding the forces at play, anticipating market movements, and positioning yourself where smart money is going. Silver isn't just a shiny metal, it's a strategic asset in the right hands. Paper markets aren't evil, they're powerful tools if used wisely. But in 2026, the question every investor should ask is, am I prepared to navigate both worlds, or will I be left behind? This is WealthWave, breaking down complex financial moves so you can make smarter choices, protect your wealth, and grow it in ways that actually matter.